So question 11, also from the Specimen paper from 2018. So there's a little section A question with 3 general ledger accounts for us to fill in. So the insurance account, which is an expense, the provision for doubtful debts, which is a provision that reduces the value of non-current assets on the statement of financial position. So that's overall going to be a credit balance. Expense accounts will be a debit balance. And then we've got up here the rent received account, which is income. So that is overall going to be a credit balance. So let's have a look at the information. We've got the owner of a business is preparing financial statements for the year ended 31st of December 2015. The following information had yet to be recorded in the business's general ledger. So at the 31st of December, so this is at the end of the year, these are closing balances. We had insurance of 490 was prepaid, so that's going to end up in this insurance account. Because it's a prepayment, it will be reducing the amount in the insurance account. Provision for doubtful debts needs to be maintained at 5%, and it tells us that the trade receivables was 6740. So we need to see what was there at the beginning, and at the end we need a balance because it's being maintained. We need to either increase or decrease the opening balance to make sure that we've got 5% of trade receivables. So if we just work out 5% of that 6740, it's going to be £337. And then we've got rent received for the 3 months ending 29th of February 2016 of 2220 was due but unpaid. So this is going to be accrued income, but not all of it. So if you remember here, our year end was the 31st of December, and this is 3 months worth. So we actually only need 1 month. So the accrued income at the 31st of December is only going to be 1/3 of 2220. So 2220 divided by 3, that's going to give us £740 in accrued income. On the 31st of December 2015, the balances on the general ledger accounts prior to making any adjustments were as follows. So insurance is a debit balance. So 31st of December, let's pop that in there. BAL BD 3730, it's an expense, so it's on the debit side. Provision for doubtful debts is always on the credit side. So BAL BD there, £382. And then the rent received, also on the credit side because it's a source of income. So BAL BD, 31st of December, BAL BD, I can't remember how much, let's have a look. There, £5,810. So that's how much has been put into those accounts as the year's gone on. Now, the balancing figure we're going to need to find with all of these is going to be the figure that's transferred to the income statement for the insurance and the rent received, but also the adjustment for the income statement for the provision for doubtful debt. So let's start with the insurance. Then it tells us that insurance was prepaid. So that means that we're going to have 31st of December 2015, a balance to the income statement. I'm going to abbreviate that because they haven't left us very much room to write in there. But we've got a BAL CD. So remember, if you've got prepayments or accruals brought forward or carried forward, don't call them accruals and prepayments. It just needs to be called a BAL CD. In this case, £490 is being prepaid. So remember, prepayments reduce the expense. So that means that the transfer off to the income statement, 3730 minus 490, is going to be 3240. Now, it tells us to record the information in the ledger accounts and that they should be balanced at the 31st of December 2015. So let's make sure that we do actually balance them off. This is another time where I wish I had a ruler handy, but I haven't, so we'll just have to make do. Both sides add up to 3730 now, hopefully. Let's just check my maths. 3730. So on the 1st of January 2016, now this is where you're going to get the mark, not for the BAL CD, but for the BAL BD at the beginning of the year. So make sure you always get that one in. Now, the provision for doubtful debts we've worked out needs to be 5% of 6740. So 6740 times 5% is the 337. At the moment, we've got 382. So we need to reduce it by £45. So that means that we're going to make a transfer off to the income statement of, if you have got room, please write income statement in full, but there's no way I'm going to squash that into that little box there. So we've got income statement £45, which means that the balance carried down is going to be what we need it to be, 337. That's the figure that will be deducted from trade receivables on the statement of financial position. So both sides add up to 3820. 2, and on the 1st of January 2016, we've got the BAL BD of 337. Okay, now the rent received, we've already put the 5810 in, I believe, the balance brought down. And if you remember, we've got some accrued income of £740. So accrued income, accruals always increase the amount, whether it's income or expenditure. So let's put that on the same side as the other receipt. So this is going to be a BAL CD at the 31st of December 2015, because that's owed by the tenants. So the total amount going off to the income statement is the sum of those two, 6550. Income statement, so that's the 31st of December 2015. So we've got 6550 on both sides. And so then on the 1st of January 2016, we've got a BAL BD of £740. And that's the accrued income for December, which has been included in the accounts to December 2015. And that will be offset when this tenant pays us the £2,220. We'll debit the bank and we'll credit that in the new financial year, but only 2/3 of it will be recorded as income in the new financial year because we've already recorded that £740 in the previous financial year. So that's question 11 done. Thanks for watching.